Hello, hello. Welcome to the live debate where we're going to be debating the CTI World Cup. Now, this World Cup is for funded traders and it's to find and discover the number one funded trader in the world. So today there's gonna be a selection of funded traders from all around the world. These guys are funded with different prop firms like CTI, My Forex Funds, FTMO, Funded Next. These guys are going to be joining us and you will hear what they think. Some of them will even share some parts of their strategy to show you how they're going to be entering and trading in the competition. So make sure that you watch until the end because this is going to be jam-packed with a lot of value. All right. So let me know in the chat if you guys can see me and hear me okay. Just type in a number 1. So if you can see me on YouTube, just let me know. Fantastic. Awesome, guys. So let me know where you guys are based. Are you guys post what city, what country you are from? Awesome. Thank you for confirming. So what we'll do, we got Sunil from UK. We got Shan from Pakistan. Fantastic. We got Thailand in the house. Got Honduras. Got Pakistan in the house. Fantastic. Hello, Raheem. Maui from Malaysia. And we got Stephen from Manchester, UK. And we got a fellow parcero from Colombia. Fantastic. Yes, and we have Shine from India. All right. We got traders from all around the world. Fantastic. Okay, so what we're going to be doing today, guys, is we're going to firstly introduce you to all of the funded traders who have previously and are currently funded, right? These guys have proven strategies. These guys have the authority to have a good opinion as to who is likely to win the funded World Cup, okay? And so you guys need to be paying attention if you want to hear about how they plan to win it themselves. This is the key here. And we're going to be discussing different strategies, risk management, trading psychology. These are the factors and these are the methods that are going to allow you guys to learn how you can find an edge in the competition. So we're going to really dive deep into what these guys are thinking. And this is the first time in the funded trader industry where a conversation or a debate like this has ever occurred. So you guys are literally part of history. Okay, so CTI right now are making history with our community of traders. So we'll begin by introducing them. Each trader will introduce themselves, and then what we'll do is we'll begin the debate. But I'm going to need a little help from you guys. So I want you guys to be blowing up the chat. I want to see questions. I want to see what you guys think. And then the panel will be able to discuss some of your questions that you may have. Okay. So who here has actually been part of a competition before? Just type in a number 2 in the chat. All right, so it's been quite a few traders already participating in previous competitions, and some of you may actually be registered for this new competition, the World Cup. But the World Cup isn't just for anybody. To be part of the World Cup, you have to have met a certain criteria. Okay, you have to have passed a funded account in the past. You had to have been part of the top traders in a competition. And there's another criteria which I need to remember properly, but there is another criteria. So as you can see, this is live because every single mistake you guys will be able to see. So this competition, this World Cup competition, is for the best of the best. Okay. And so this is why it's really important to really pay attention if you want to win this next competition or any competition. Okay. And not only are you going to be able to learn and improve your trading, but this is going to help you as a funded trader, because there might be some strategies or some tactics that you may not have thought of that is just going to spark some ideas. And we've actually got in the panel competition winners from other competitions with CTI. There was a competition winner from top tier. So I'll be introducing those traders in any minute now. Let me just go ahead and check everything's okay on my end before we bring up those traders. So just give me 1 minute. Fantastic. Okay. Right, so before we begin, make sure that you guys are smashing that like button. Let's give a very warm welcome to our panelists. So in the chat, let's have some drum rolls. Let's have some applause. Yeah, let's see those emojis. And let's start bringing on our guests. Fantastic. Here we go. All right, so what we'll do is we'll start off by introducing everyone in the panel. So everyone will introduce themselves, and there'll be some questions from myself. There'll be some questions from the audience in regards to the funded World Cup that CTI is hosting. So let's begin with Joseph.
How's it going, everybody? My name is Joseph Caruso. I'm from Pennsylvania in the USA. I've been funded with my Forex funds, the Funded Trader, and currently taking an FTMO challenge. I placed in 17th place in the top tier monthly competition back in March or April of this year. I've been trading for a little like 3.5 years. I'm part of the new wave of pandemic traders, I guess you could call it, where just the huge volatility was like a perfect opportunity. We got into stocks and then quickly moved into something that you can profit off of even in a bearish market. which is, the Forex market is something unlike anything else. And it took me about 2.5 years to become profitable. And then this year, I've pretty much been a full-time trader since February.
Fantastic. Welcome, Joseph. Thank you for being here.
Thank you.
And Sir Mads.
Hello, thank you for your invitation. And my name is Sarmad Sultan. I'm from Pakistan, and I'm trading since 2015. And since today, I have taught more than 300 students from Pakistan, from India, from Canada, also from Dubai, from Saudi Arabia, and from Spain. Currently, I am trading with Funded Next. I have started almost 6 months ago with my Forex fund, and 2 years ago, my first prop firm was FTMO, and currently I am working with only with Funded Next. But now, after that, now I'm planning to start with the CTI also. Thank you.
Fantastic. Thank you for being here. And Mr. Climo Berkani.
Everybody, my name is Crimo Berkani. I am from France. So I start trading since 2018, at the end of 2018. First, I started with different brokers, and I have been blowing up many times my account. And I have been mastering my strategy with the time and working very hard. And after I discovered the Fivers prop firm, so I started the challenge with them, and then I achieved the challenge, and now I am PM2. It's 48K, and in the same time I discovered the CTI, which it is the best, I think, the best prop firm in the world, and I'm very satisfied. I have been trading with CTI since 4 months ago, and I started only with 6K, and now I am prop firm portfolio manager for 40K already in only short time, 4 months. And I'm very satisfied with CTI, and I hope to be a profitable trader for a long time. Well,
Fantastic. Thank you for being here, Crimo.
thank you very much.
Hello, Abdul Hafiz.
Hello everyone. My name is Abdul Hafiz Maman from Nigeria. I have been trading since 2 years ago, and now I was one of the winner of the first CTI competition, and also I have had an account with MFF.
Fantastic. Well, thank you for being here, everyone. It's an absolute honor. You guys are amongst the very few, right? You guys are part of the 1%, because let me tell you, the facts are most funded traders are failing. Most funded traders are blowing up account after account, okay? This is not easy. And whatever you're seeing in social media, when people tell you it's easy, they're showing the Lamborghini lifestyle, the private jets, right? The reality of it is not like that. And today we're going to be discussing what the reality is. What does it actually take to be a professional funded trader? What does it actually take to win a competition? Yeah. And so, this is why I wanted to bring you guys in to fully understand and let the audience understand, because there's a lot of traders out there that they don't have a profitable strategy, or they have a profitable strategy, but they don't have a correct risk management plan, protocol, and a risk management strategy, right? They're struggling with that. And most likely the majority of traders are also struggling with their mindset, with psychology. So what does it take? What mindset does it take? What actually what tools helps you guys? You know, I'll be interested to know how you guys are running your businesses, your funded trader businesses, and how you guys are actually finding success in the competition. Yeah. So because this is a debate about the World Cup, the first question that I want to ask is, what type of strategy is most suitable for a competition like this, where you have around 45 days to pass, and you have a daily loss limit, and you have a max loss limit, you have a max drawdown. So what is the best strategy for a competition? So who would like to answer that? Sarmad. Okay.
The technical strategy I have, I'll recommend for to play the funded account is there are two strategies in my view. The first one is smart money concept, SMC, or order block, and the second method is divergence, because both of the strategies have very small risk, and they will give you the high reward, and no strategy will be useful if you are not following money management. So I can say the money management is the biggest strategy to win the funded account.
Yeah.
Money management is that is the best strategy. If you are not following money management, you can easily blow your account. It is quite possible one or two trades you may gain highest profit, but it's a completely loss of your trading psychology. So that's why first priority is trading psychology, and then you can come to technical strategy. That is in my view what I am using, that is uh, uh, SMC or divergence.
Fantastic. That's a great response. Would anyone like to reply? Yeah, Joseph.
Yeah, I really like what he said about money management. You know, like it's almost like the psychology things are the most important, because most strategies that people come up with are profitable if they just stick to it and actually let trades play out, be patient. For me, when I did good in the monthly challenges, and even, you know, I pretty much trade the same way for funded accounts, the challenges, it's patience is huge. You know, I didn't trade every single day, you know, even though prop challenges, they have this time limit. You know, funded accounts, you're trying to make money all the time, but it's so much different than a regular job where you show up every day and you make money every day that you're there, you know. But with trading, you get paid to wait. You know, literally you make more money when you're patient for your setups and you just have to let them come to you. So for me, I did the absolute best when I really understood that and knew I didn't have to trade every single day. And I trade higher time frames, so that was so for me that's not much of a problem. But like Samad said, hidden divergence is probably my favorite setup. On the 4 hour, the 1 hour, hidden divergence off the 50 moving average. That's really probably, I'd have to say, one of the highest risk to reward, because a lot of times price will break the high or the low because you're trading with the trend.
Yeah.
So moves like that where you could be confident, set your stop loss to break even or slightly in profit, and really let those trades run.
Nice. Yeah, it will be interesting to see how you see that. We can I'm sure that a lot of the traders in the audience will be interested to see what that looks like. So perhaps you can share that later on. So you guys touched on some very, very valid points, and it's very interesting to hear that it really does come down to money management. It really does come down to how you're position sizing yourself. But to do that, you need to have strong psychology. So let me ask you guys, what psychological traits do traders need to have? What problems do they need to overcome? Yeah, so Sarmad, what would you like to say about that?
One of the biggest problem with every trader is trading psychology, because if you are not in your control, you cannot control your lot size. If you are greedy, you may increase your lot size. If you are fearful, you may shut down your laptop and fought with your friends and etc. All these things. Even you I always says that if you are and not in your sense, if you are completely depressed, please please stop your trading. These are the psychologies. Sometimes a trader face the issues that they want to control their psychology, but they become emotional and overconfident with their strategies and put the highest lot or higher lot in the account. In my sense, in my view, the solution for the trading psychology is to give your remote control to the higher authority. For example, I am a teacher. I am a forex teacher. If I am a forex teacher, so my student will allow me to punish them, that if uh, uh, if Sultan use the higher lot, I'll punish, I'll fine, I'll change the account password, I'll not allow you to trade. Then he's fearful that if he is not able to answer anyone and not answering anyone, so he can do anything what he want. But if his remote control is in the hand of another, which is the higher authority, he could be your brother, he could be your wife also, he could be your father, he could be your teacher, which who can punish you. If you are doing this, I'm more sure that your psychology will be controlled, because you will decide your lot size, that I'll use one standard lot on 200,000 account, and you wrote this rule and give it to your teacher. And now you said that, sorry.
That's a very interesting. I haven't heard of this type of method before.
That's completely my
So,
personal view.
yeah, this is interesting. Does anybody have a response to that? As in having your strategy and I guess accountability with somebody like an authority figure to kind of give you that motivation, to give you accountability, to you're almost fearful of or ashamed of what you're doing because you have that you have someone overlooking what you do. So does anyone have a response to something like that? Go ahead, Joe.
Yeah, it definitely will work well if somebody sticks to it. I've done that with like close friends where we try to, keep up every day how far we are in the challenge, how's our funded account going, things like that. But then the problem comes when somebody takes like a bad trade or something they know they're not supposed to. It's I know I can speak for myself at times that some people could get like sneaky with it. You know what I mean? And really try not to tell the person what happened, or not to be honest about it, or skip things over, took a couple losses they weren't supposed to be in at all, and then they try to make it up with an even bigger trade to bring their balance back to where it was so the person doesn't know. There's a lot. It's just I don't know how many people can honestly stick with that. But it is good, and that's what makes trading such a disciplined thing. Like, you have to be so disciplined because it's like you have to act like that even when nobody is watching. You have to almost in your head have that same type of mentality, but start to be afraid of the consequences for yourself, not just what your mentor or somebody else watching. Because yeah, those mistakes, when there's no accountability at all, it is tough. And I feel, you know, we all go through that in the early stages learning to trade, where we make, you know, mistake after mistake, and we don't want people to know, and, you know, not realizing that it takes years, you know, years to get good at this.
Yeah, that's interesting, Joseph. Thank you for sharing. And so, Primo, do you think that, from your experience, do you find trading on your own, are you more efficient as a trader, as a portfolio manager on your own, or do you have experience working with others? Like, what is your take on working with other people when you're trading?
Yes. Do you hear me first? Do you hear me? Yeah.
Yeah.
Okay. So the most difficult is, of course, is the money management. Yeah, the mindset. If you have a good mindset, and don't over trading, avoid to over trading, and to have a strategy to respect your trading plan. If you should have a trading plan and strategy, of course, which has been back tested many times. And after, only respect your plan of trading, okay, and the money management, of course. uh, don't be greed, avoid the greed, and
Mm-hmm.
that's all.
So, in your experience, have you always traded on your own, or do you have a mentor and a coach to have accountability?
Yes. Yeah, of course. I have a mentors. One, his name is very famous in trading forex. His name is Master Fang. He's Master Fang. He speaks in French language. He has a own YouTube channel, and he
Mm-hmm.
have a very good strategy with forex. And the second was Neil Feller. He's very famous. He's an Australian traders. He was, I think, the world champion of the trading. I don't remember which year. And with his strategy of inside bars, he has very powerful strategy with inside bars. So I have been learning many things. I have been I got a good background with this strategy, and I try to develop with the time, because we have to master it with the time and to backtest it. So this is my experience.
Good. So there's a mixture of having that accountability, and I totally agree. Yeah, you need guidance, you need mentorship, you need that accountability. But again, Joseph, you raised some interesting points that you can end up conflicting ideas. You can have a little bit of individuals may not be as transparent, and so yeah, it's I do think trading is both something that you need to be able to have the discipline to do certain actions, certain executions on your own, but at the same time, you need the accountability from a coach, a mentor, or a community, or even a trading buddy, that so that you know, because if you're breaking rules, who are you accountable for? What is the consequence to that? So, Sarmad, you made some very interesting. You have some very interesting methods in regards to helping your students, but of course, you know, it's important to, if it works, it works. You know, that's the key, isn't it? So, I would like to ask the audience if you have any questions from for the panel in regards to trading in a competition, and you know, if you're struggling with your strategy or you're struggling with your psychology, then this is a good opportunity for you to ask the panel for some tips. So whilst you guys are coming up with some questions, I'll keep firing off some questions. So in regards to risk management and position sizing, I've seen some absolute ridiculous type of performances from certain traders, right? There's certain traders that are just achieving like phenomenal, unrealistic results, and they end up blowing up. I've seen other traders, slowly go up, and then at the end they really put the foot on the gas, right? Now it's very different when you're trading a funded account. So how do you guys that have been funded and have also done competitions, how do you guys manage your position sizes? So Abdul Hafiz, what, because you've been in the top winners of a competition, right? You've been funded before. So how do you manage your risk for a competition and for a funded account? Is it the same or is it different? Yep.
Yeah, when I'm trading competition accounts, I know that in this kind of environment, I need to be very increase my risk a bit because I'm competing with other traders that are very good. So when I'm trading a competition account, I used to take not more than 2 trades a day, mostly.
Mm-hmm.
Then I will make sure that in each trade I risk like 1.8%. If the maximum drawdown is for a day like is 5%, I will make sure I'm risking maybe 1.7% per trade. So I just want to hit it once and have a lot of percentage from the trade, at least 1 to 3 risk to reward ratio.
Okay.
But when I'm
Interesting.
trading my personal account, I used to risk nothing less than 0.5% and nothing higher than 1%.
Okay. So you tend to increase the risk more during competition time, yeah?
Yeah, exactly.
Okay. Any replies to that? Okay, Sarmad. Thank you.
Uh,
Thank you.
in my view, the trading in the funded account is much different than the brokerage account. But here is the best strategy I have, and I am using my for my personal accounts also. The one of the best strategy is to wait for your first entry. uh, I'm thinking that if a trader get his funded account and he put the trade in the account within 15 or 10 15 or 20 minutes, it is quite possible he may lose their account his account, because he has no patience to wait for the trade he should find. Here the trader should do that he should enter with the low risk. For example, if I am trading with 100k account, I should take risks more less than 1%. If I am taking the risk less than 1%, I my reward must be 2, 3, 4, or 5. If I am trading with 1:5, so if I'm taking risk half percent, then my profit will be 2.5%. And now I have gained 2.5%, and now I should take risk uh, all the profit or the sum of the profit. I should remain the amount. If I earn $500, I should take stop loss of $400. I should reserve $100 for the account. If I my account got low and I got stopped out, and if I'm depressed, so my account is positive, I can retake. That is the strategy I am using for the funded account. And still this strategy should be used in the competition account also. For example, if the competition is the winner will be the person who will make the highest profit, so he should do that. He should enter with the low risk, then with the profit he should increase. Slow and steady, he's making the highest profit, he should increase the risk. That is the strategy I am using, and I'll recommend to you, all of the traders, they should use. But the matter is they should reserve the amount, even it is $2 or $3 from the started account. because if he's because of the stop loss hunting, if he's depressed or if he's tensed and not able to trade, so he is easy that he can retake. So that is the strategy I'm using.
Very, very. Thank you for sharing that. That's a very powerful strategy, and I can see how that risk management strategy can help also with psychology, because you are preserving the capital. That's the key, is ensuring that the capital is being preserved. So, any replies to that from anybody else in the panel? Go ahead, Joseph.
Yeah, I completely agree with him, and I think that's really important. The whole idea of when you're doing a challenge, I mean, even with the funded, like this mentality works with both of it, is to build that cushion in the beginning of the challenge when you first get a funded account. And especially for me, and I'm sure other people could also relate, is psychology gets real messed up when you start a challenge, and you go negative right away. So like, if you're on a 100K account and you're risking five lots off the bat, you lose your first trade, you might be down, 1,500, 2,000. It's hard to function, when you're in drawdown, when you're negative. So I do the same thing as Sarmad. It's like, for my 100K, when I started trading, I was using like 1.5 lots and built up to like $1,000, $2,000. Then I started, 2.5, and then I kind of stayed in that range. But it helps your psychology a lot when you're trading small early on to build up the account a little bit and get your, for me, it's definitely all psychology based, but to build that cushion for yourself, to again, really get in the groove of the challenge. Not you just, the worst thing that can happen is you go too big early on and then it's so hard to recover.
Absolutely. Absolutely. And one of the ways that we were looking at previous data, we're looking at previous competitions, and we wanted to come up with something new, something unique, a new way to look at the metrics for the winner. So what we wanted to do is we wanted to filter out those who are just getting lucky, right? Those who are just putting in very, very high risk and getting lucky. We wanted to change that. So this is why the World Cup is very unique in how we're looking at, because we have a particular point system. So I'm just going to bring that up, and I want to understand from your perspective, for you guys in the panel and also those in the audience, what you guys think about the way we are choosing the number one funded trader in the world based on highest net profit and highest net profit divided by the relative drawdown ratio. And so on this page where you get to register for the Funded World Cup, you'll be able to see how the point system works. And there's a few examples here at the bottom, which you guys can go through in your own time. So I wanted to ask you guys here in the panel what you think about this new way of finding the top winners, and then most importantly, the number one trader. So I'll choose Cremo Berkani. Hold on, let me just, you need to unmute yourself.
Sorry. Yes, yeah. I think this is the very good methods to choose the best traders. I don't know all about this. So I didn't have time to check everything, but as I can see, I think it's very good methods.
Good. So the where we get this this statistic from, you can actually find it in one of you in a MetaTrader statement. Yeah, it's it's the you'll be able to see that that figure. I believe it's called the profit ratio, or the risk. Yeah, the profit ratio. So you'll be able to see what number that is, and so based on what number that is, then you get one of these points added. And of course, the highest net profit percentage. So if you are, this is kind of self-explanatory, right? Of how many points you get. Then those points get added together. And then that's how we're going to choose the winner. Yeah.
Yeah.
So what kind of strategy based on this, what kind of strategy you guys think you need to follow when it comes to risk management? Because it's not just about your highest net profit. It's also how you're managing your drawdown, how you manage your downside. That's what we're really testing now. So Abdul Hafiz, what do you think that you'll be able to profit wisely, risking what you were saying? You were risking about 1.7%. Let me just unmute you. Hold on. There you go.
In this kind of scenario, when I want to approach the market, I will approach it with a swing strategy. Like, with swing trading, you can risk less and have huge returns. So I think I'll make my trading to be like 60% of swinging and maybe the remaining 40% for day trading, for like building the equity up as the swing trade is running.
Yeah, I think that's a very, very valid point. I think swing trading will probably have a little bit of an advantage here. But at the same time, you have that element of how long do you need to hold a trade for to get a good risk reward? How big is the stop? So, Cremo, you look like you have you agree there.
Yes. So as he said, so I think the best strategy it will be in a swing trading. So to try to respect this criteria and to be the minimum risk. Don't risk a lot. Yes.
Thank you. So let's go ahead and start answering some questions from the audience. So we have a question from, let's see. So we have a question here. So raise your hand if you'd like to answer it. Question is, what preferred risk reward and best time frame for competitions? How many trades per day for a competition? Yeah, go ahead, Abdul Hafiz.
Yeah, when it comes to time frame, I noticed some people used to confuse themselves with time frame, in the sense that they are swing traders, but as a swing trader, you need to just focus on maybe the daily, weekly, and the 4-hour time frame. Whereas some swing trader will be looking at 15 minutes, 5 minutes, which might be giving them wrong signals. But for intraday trader, they will also be looking at higher time frame, whereas most intraday opportunity used to appear on the 15 minutes time frame downward. That is how I see it to be. So, and for risk to reward, I think 1 to 2 risk to reward with 50% winning rate will be very okay. Because sometimes I used to take trade that is 1 to 3 as overall target, but during the trade running, I'll be taking partials along the way. So I'll take partials on each equal lows, that is where liquidity lays. So at last, I'll have like 1 to 2 or above on my reward, risking 1.
Fantastic. Any replies there? Go ahead, Joseph.
Yeah, I would say you definitely want the highest risk to reward, which is it's good to scale in. Like, even though I trade off the 4-hour and the daily most of the time, I'll still be on the 5-minute, 15-minute, because that's where you could find the best, to find order blocks you want to be on those smaller time frames, and that really gives you the best risk to reward, in my opinion. Is even if you're a swing trader, especially for funded counts competitions, for everything, is it's really important to scale in for your entry. And for me especially, I'll scale in to stack, because I don't always go in with I'll go in with my first entry, but I'm always under the assumption that I'm going to take multiple positions off of one setup. So I'll wait for, a retest once the trade goes in my favor. When it comes back to that order block, I'll re-enter there. If it's a break and a retest of a 50 MA on a smaller time frame, of support turned resistance, that type of thing, I look for any confluences I can find as far as another reason to stack to my position. Because when you're swing trading and it starts going in your favor, you can pretty much assume that you were right as far as the trend, that it's almost like, why not add to your winning position?
Yeah, exactly. So would you like to show the audience an example?
Yeah.
All right, go ahead.
Okay, so a good example of one of my favorite setups, I'll go over. I have it on the daily time frame. This was Euro USD. This trade occurred on August 12th. So I had a trend line drawn up. Euro USD was obviously bearish. The hidden divergence, I used the TDI indicator. So what I was looking for, right where I have this little purple line, right where you could see the entry was, is the last peak. I'm comparing the peak that it made now at the 50 moving average to the previous peak at the last time it touched the 50 moving average. So price went down, but the TDI went up. So that's the hidden divergence that I'm looking for. And I take those trades right on the moving average. And in this instance, this was multiple confluences. So I had hidden divergence on the TDI at the 50 moving average. It was also a 0.618 Fibonacci retracement level. Market was bearish, so it's with the trend. And it's also a trend line touch. So I would never hesitate if I see a setup like this. And essentially the move, I took it to baseline, to the support, which in total was almost 400 pips. But I measured this just to show what I meant about when you're in a hidden divergence, how often market will break the low, which is exactly what happened. So in this instance, you could have held on to part of it and really just let it run. Most of the time, I will take it to baseline, the base support, base resistance, and either close most of it, let a little run, or I'm usually pretty happy once it gets this far, because I also protect my position, and once it starts going in my favor, I will always set my stop loss to break even. I don't really trail it too far. I rather take partials after every next level of support, next level of resistance. But in this instance, so this trade was 400 pips, but ultimately market is still kind of dropping, and it moved to 800, almost 800 pips. So that's what I mean by the risk to reward on these trades is really well. And another quick one was on GBP AUD. This trade was on a 4-hour. So hidden divergence, and this one is, I call this a shark fin. Let's see. I learned that from my mentor, if anyone knows who Derek Vandelinder is. A shark fin is essentially right where I have this entry. A shark fin on the TDI is when it's above the 75 for a sell or below the 25, and it's outside of the Bollinger on the TDI, which is exactly what happened here. It's above the 75, out of the Bollinger, and it has to be at a moving average. So my confluences for this trade was a shark fin at the 200 moving average. It was a 618 Fibonacci retracement level. Market was bearish, so it was with the trend. And this trade, I took it for about 300 pips. But ultimately, this was another example of these types of trades when you're going with the trend. The same thing, it broke past the previous support and continued to drop, and then we had that huge drop that happened recently. But these are the type of setups that, for me, I don't usually trade every day, because I wait for these setups on the 4-hour and on the daily. So I might get a couple of them a week or one every other day.
Yeah.
But
Yeah.
the risk to reward is really well. And most of the time they play out. I mean, sometimes they'll come back to break even. That's usually my worst case scenario, because a lot of times the 618 is a really good Fibonacci level as far as price almost always will have somewhat of a reaction off that 0.618. And if it, once it's 30, 40 pips, I'm putting my stop to break even and, just letting it go from there.
Yeah.
So I feel for the World Cup, trades that you can get a 1 to 5, a 1 to 4, 1 to 6, 1 to 8, like those are the best because of those type of rules. You don't want to, always be scalping a 1 to 1, because what happens if you hit 3 losses in a row?
Yeah. And because it's a competition, you're doing a little bit more risk.
Mm-hmm.
So yeah, we had a question earlier in regards to is it okay to add more risk during a competition? Because this one here by Lynette. So is it okay to risk a bit more during competitions? Who would like to answer that? So, Cremo, would you like to answer that one?
Yes, yes. I think it's no need to increase the risk, because it's already too much, and it doesn't help. It will be worse. I think it's already enough what we have, and no need to more risk for me.
Okay,
It
thank
can
you.
only blow up the account very quick.
Yeah, that's true. Over leveraging is definitely a double-edged sword, but used wisely, it can definitely put you ahead in the competition for sure. So it is going to be a tough competition with these new rules, and it'll be very interesting to see how traders are actually going to overcome the challenges of actually maintaining good drawdown, right? And there has to be so much discipline when it comes to protecting those losses. So it might be that everybody has to just look at their numbers. I mean, I think it's important to understand your numbers. Yeah. Understanding what your particular strategy and your performance, your own execution, how can you optimize it for this competition? I think there has to be a strategy just for this competition. And it's going to be a little bit different to funding. It's going to be a little bit different to other competitions. So this is going to really test you as a trader. And in particularly your psychology. And there was a comment here by someone in the community about the psychological aspects of trading is not more than a trader trading in their comfort zone. Take the trade when the strategy says so. I mean, it's so simple, isn't it? It's so simple such a simple concept, which is whatever the trading plan is, when the market gives you that criteria, just how Joseph clearly showed us, when the criteria is there, all the confluences line up, all you got to do is take that trade. But we are human beings, right? We have flaws, we have cognitive biases. So what is the best way to maintain strong psychology and discipline for this World Cup? My question to the panel. Go ahead, Abdul Hafiz.
From my own perspective, I think for someone to maintain a good psychology in any trading environment, the person should reduce the amount of trade he takes per day. Like maybe taking just three trade a day, 2 trades a day, something like that. Because we human, we tend to get aggressive when we take too much trades per day.
Thank you. Any responses?
Hello.
Yeah, go ahead. Cremo?
I think that you have to maintain when you have a cluster of the bad traits. Don't try to react like injured animals. So to try to recover the losses. So so it's very important that even if you have a cluster of good traits, to respect your planning, the trading plans, and money management. Same. And I have learned something that I don't I don't have to exceed 1% of losses. If I exceed this, I have to cut my trades. Anyway, if I exceed 1% of losses, I cut automatically.
Yeah,
So
yeah, this is
this
important.
is
The
my
actual,
methods,
yeah, the having what
and
you
I have
guys
been
are
learning
doing.
this from CTI, from CTI,
Yeah,
from YouTube.
good, good. Yeah, this is very, very important, is having limitations of how many times
Uh,
you are entering the market, because this is in itself a risk management method, is controlling yourself, where you're only taking the highest probability trades, and they may only come every few days. For some traders is every few weeks. So it's just a matter of yeah, having that discipline to stay away. And so Mad,
Hello.
what
Yes.
for when it comes to psychology and risk management, what does it take to win a competition like the World Cup?
Uh, I'd like to add my views on all of the three questions that you
Sorry, we seem to have lost you there. Looks like we've lost connection with Sarmad, unfortunately. So let's go ahead into the comments. So some of the audience agree that Mohammed says just 2 or 3 trades with proper setup, with proper money management. Yeah. And there's another comment here from Wave Rider FX. If you executed your strategy and it was working in the past, just get better at it in the tournament. In my opinion, I think this will give you an edge during the competition. Okay. Any replies to that one? Yeah, go ahead, Joseph.
Yeah, as long as your strategy is functional and can cooperate properly with the rules of the challenge or the funded cup, I would say it sounded like they were saying you don't have to change too much with your strategy, just basically keep practicing it and perfecting it, which I think is good as long as your strategy is going to work with those specific rules for the World Cup. You know, if the trades aren't good risk to reward, then you might have to change it something a little bit. But yeah, maybe I would say be more disciplined though, like other people were saying. Only high
So,
quality setups. Don't take every little thing to try to make, money as much as you think, as possible.
so should traders be experimenting during a competition?
No, definitely. It's not the place or the time.
Yeah, because well, what Wave Rider is saying is that you just get better at it in the competition. How can you get better at a strategy in the competition? I think you have to have the strategy to begin with. You have to have that a strategy in place for the competition, but to improve it during the competition, that means, to me, that sounds like optimization. How can you optimize in the middle of a competition? I think that's for me personally, I wouldn't do that. So there's a question here from Sunil. How do you deal with account in negative at the start? And then that plays with your mind. So who would like to respond to this question?
Yeah, in when I find myself in a scenario whereas my account is in negative, maybe immediately I start a profit account, or immediately I start trading in an account, I tend to reduce my position size rather than increasing it, because I noticed that most traders lose their account when they increase their position size. Rather, I would like to do the opposite of what people are doing.
So you start slow and you slowly start scaling your risk as the competition progresses, yeah?
To me, I don't used to start slow though. I have a very low risk, so I tend to just stick to it. I don't really have high risk when I'm doing competition. I'm trying to compete with very good traders that are very good. So I try to increase my risk to be able to be competitive with them.
Mm-hmm. Okay.
So,
So I have a
but when I start my trades and I'm in drawdown, I tend to reduce my position size, maybe by half.
interesting. That's very interesting. So I have a question for the audience. Who do you think, or what strategy do you believe will have an edge during this World Cup? Swing trading or day trading? Just write that in the comments, please. Which strategy do you think has the better edge when it comes to the competition? So let's wait for those comments to come in. Okay, so we've got Sunil saying scalping. Another trader saying swing. So already there's traders that have different opinion. So Rocketman Investor says day trading. So this over to Joseph, because I know you're using the higher time frames. You like to hold your trades. What do you say to that? I mean, you're a previous competition and you're funded. What do you have to say about that?
I definitely think the higher time frames is the way to go, because you don't have to take as many trades. You know what I mean? If you can have a 70-80% win rate on a 4-hour daily, then in that sense, you can also scale into your position as a swing trader to add to put more lots on wherever you see necessary. But with scalping, and it's much more unreliable. Like, if you're somebody who trades on the 1, 3, 5 minute, you see how often does a 1 minute or 5 minute trend line get broken, or 1 minute support, 1 minute resistance gets broken. Then you look at something like daily support or resistance. Price will almost always have some kind of reaction at a daily or weekly support resistance, enough to where you could put your stop to break even once you have that little push, and then there's that chance that it's just going to keep going and you're right about the trend. So I feel like on that respect, scalping and trading frequently is a lot harder too, in my opinion, because you have to follow the trend on all these different time frames. You might be scalping on the 5 minute, but you have to know what's going on the daily, the 4 hour, the 1 hour, to know where, you know what I mean, if that makes sense. I feel scalping is a much harder in general, and it takes a lot more. You have to be at the chart at your computer a lot more, whereas you can go it's a lot more relaxed to be a swing trader, and a lot more opportunities to set your position to break even. That's one of my favorite, to always protect your capital, always trade defensively. And sometimes I feel scalping, it's such small of a move that you're getting sometimes that it's very easy for even a break even stop loss to get hit.
Thank you, Joseph. So in the panel, are you any day traders in the panel right now? Abdul Hafiz, what do you think?
So to me, when someone has a very good strategy and a method of approach to the market for an intraday trader, which are day traders, I don't see any difference in day trading and swing trader. One just have to master what he does. But a swing trader will have more edge because the less the strike, the less the trading, like the less you enter the market, the higher chance I feel one can win the competition.
Yeah. So you sort of backing up what Joseph has to say, yeah? Interesting. I think me personally, for this particular competition, I think there needs to be a hybrid of the two. So Joseph, your strategy clearly has an edge. And I love that shark fin, by the way. I might have to look for it. I might need to look into that. But for my particular strategy, I'm looking for, yes, I'm looking at different time frames, but my entry is on a particular smaller time frame. So even though I'm using higher time frame market structure and order flow and patterns, I'm also using the same concepts on a smaller time frame. So that trade, for example, you had on the euro may have been a 50 pip stop, whereas I would be looking at the same target. I'll be looking at that support, but I'll be looking at something more of a 10 to 15 pip stop. So I think if you can find a hybrid of the two, so you're going for very high double-digit R multiples or double-digit risk to reward, I think that this will, although it does expose you, it can expose you if you overdo it. So a hybrid of perhaps maybe 1 to 2 trades a week, but with a very refined stop loss. I believe that this will give you an edge because then you are preserving the capital. So you need to have that break-even rule in place. But at the same time, you're taking advantage of those higher time frame swings. So this has allowed me to have smaller drawdowns and higher profit because it's just a hybrid of the two. So it's very interesting to hear everyone's take on it because obviously whatever works for each trader works for each trader. But there's one thing that I'm a bit jealous with swing traders, and that is that day trading is far more stressful.
Yes.
It is. You have to have a certain level of tolerance, resilience, a lot of tolerance and resilience because you're exposing yourself a little bit more in terms you're more active. You have to make faster decisions. So it's not for everyone. That's for sure. So yeah, we've got a comment here from Sunil. Also depends on asset and individual way of trading. I tried swing trading, but closed trades way too early. Yeah, this is the thing. Being a swing trader, you need the patience. You need to have the patience to let the trade play out. And this comes down to your discipline and psychology in the end. Go ahead, Joseph.
Yeah, I was gonna say that anyone who's starting out or has a plan to maybe swing, you can't never think that off the bat you're gonna get a 200 pip trade or be able to hold. Like it definitely took time to get there. I think most people, and especially I did, I started off scalping where, it's like, oh, I made $100 in, 5 seconds, 10 seconds, like that type of, when you first start trading, you want to make the money as fast as possible. And then I learned about how powerful these higher time frame moves and getting higher probability trades. But I would tell anyone, don't be discouraged if, you say like you tried to swing trade and, I closed after 10, 20, 30 pips. That's perfectly normal in the beginning. It takes, at least months, to actually transition because your psychology has to develop. How you react when you're up, when you're 50 pips in profit, the first time is going to be different than being 50 pips in profit, the 38th time you've done it, or a couple months into it. So no matter what, it's just like it's like stepping stones. Try to get a little bit farther next time. That person who said that, if you closed early, try to let it run an extra 5-10 pips next time, and just take those little steps, and then you'll see yourself being able to hold trades for longer and longer. But it takes a little bit of time.
Absolutely. So we have a comment here from Asim, says all strategies and knowledge are useful only in live funded account. Only luck favors you in the competition. If your luck is good, you can win the competition without adopting any strategy. So does anyone disagree with this? Raise your hand if you disagree. Okay. Joseph, why do you disagree?
So I'm going to say it in the respect as like, this is also why the World Cup is going to be so much different, because you guys are adding that point system, which completely changes the way competitions are run. Because for normal competitions, I would say that, yes, somebody can go 50 lots or 100 lots on a trade, and they might hold that 100 lot trade for a month. Not the whole month, but, a week, 2 weeks, and, boom, they made 10,000, 30,000, something massive off of one lucky trade, which I think is really good that you guys, CTI is doing for the Funded World Cup, is trading the dynamic, adding something that will prevent people from taking these super risky, full margin trades.
Yeah. Totally understand. There is an element of luck, but with this point system, it removes that. You have to. There's no luck in this. Or the way I see luck is that, for me, the definition, especially as a trader, the definition of luck is when preparation meets opportunity. And so, if you've done the work, you've got a trading plan, you've executed that trading plan over a period of time, you have seen consistency on a trading account, you've done it on a live account, so you've also seen how you manage your emotions and your psychology, your discipline. Once you have that, and when the market gives you a signal, like Joseph, your trades, when the market gives you that signal where it ticks all the boxes, for me, that is the definition of luck, is when being prepared when the opportunity comes. If that to me is luck. And so I would disagree with that comment also from Asim. Thank you for sharing that comment, because it's it has to be. I'm talking from experience here, and I'm sure Joseph as well is talking from a lot of experience when it comes to luck. So let's have a look. Problem is the profit you see. All right. So yeah, we've got a few more comments saying that luck matters sometimes in news trading. So that's an interesting point regarding news. So how do you guys use the fundamentals and economic data in a competition? Do you think it's important, and why? Cremo?
For me personally, I'm not using fundamentals analysis only in charts. Everything is in price action in charts. I try to look the candlestick and in a zone, special zone where the banks and the institutional react. So I'm not because I'm in swing. Donc, so it doesn't affect much my trading, my trading in swing strategy. Of course, in scalping, it's completely different, because there is force signals, and we are trading in high frequency with computers, with robots, and it's very complicated with in scalping. But in swing, no problem. I'm only looking charts and the graphics, technical graphic, and following the the candlestick in a zone.
Mhm.
So
Okay, that's yeah.
what they
Thank you for
call
sharing
price
that.
action. Look,
I
check the price action.
yeah, yeah. Thank you for sharing that. And for me personally, from the swing trading experience that I have, and as well as speaking to profitable or consistently profitable traders who are trading swing, they in fact, and I in fact also use fundamentals. So I use macro analysis. So I'm looking for seasonality trends. I'm looking for divergence between inflation policy from central bank. So for me, that's it's very important uh, as a swing trader when I'm looking for those bigger moves. Whereas when it comes to my intraday type of entries, they don't. I do take counter trend trades, but on an intraday basis, um, and the fundamentals don't really play a part when it comes to that, because I'm literally targeting liquidity and I'm exiting at liquidity. That's what I'm looking at. But if I enter into a small position, a scalping position, I can, if I want to turn it into a swing trade, I need to ensure that there's divergence between central banks. So for me, a dollar yen long has been preferred this entire year just because of divergence. So for me, if I enter a dollar yen short, it's very short term. I'm looking for maybe 40, 50 pips. But for a dollar yen long, I'm looking for a 200, 300 pip move. I see Joseph is nodding his head. How do you use fundamentals, Joseph, in your strategy?
Yeah, very similar to what you're saying. I really take into account the interest rates, because a lot of times you pay attention to interest rates, and it is like Krimo was saying, you will see it in the charts. Like, you compare interest rates of the United States with Japan, and you're going to see why the trend is the way it is. But I will sometimes specifically wait for news releases or CPI especially, because CPI is probably the most relevant news for any country, for any currency, because that's really what's moving the currency. So I will hold off on a trade if CPI is coming out at an hour or two after, because I start looking for trades around, 6 a.m. CPI comes out a lot for US at 8:30. But I will specifically trade with the CPI. A lot of times, even using buy stops, sell stops, when something like CPI is coming, because when the dollar has CPI and say it's favorable for the dollar, like what we've been seeing, you'll see these massive moves on currencies where you don't have to get in on the bottom of the move to make money. And a lot of times I will immediately move my stop to break even. So, price will start jumping. That's CPI news. I don't trade a minute or two before trying to guess which way it's going to go, but I'll wait for it to come out. You'll see it moving. It might have already moved 30, 40 pips. But as long as the technicals look good, I have no problem jumping in the middle of news, right after the news release, and continuing to ride that wave, for the rest of the day. Or if CPI comes out and a price moves inversely. So, say if CPI came out good for the dollar, and the dollar started to drop, the minute it hits a nice level, I would jump in, because you're under that assumption that it's going to rebound and go in the favor that the news said. So a lot of it took experience. It took a lot of trying to figure out understanding the fundamentals. But I mean, then later you get to a point where now I have no problem trading with the news. But early on, if you don't understand a lot of macroeconomics, it's better to just not stay away from the news if you don't really know what's going on.
Yeah. So we're going to have to start wrapping things up. It's been an absolutely epic conversation. We've touched on topics regarding technicals, fundamentals, trading psychology, risk management, position sizing. We've looked at different strategies, swing trading, day trading, and it's been an absolute honor to learn from you guys. You've had obviously a lot of experience in trading, not just in as a funded trader, but also in competitions. And so I'm looking forward to seeing how you guys perform in the next competition. And I want to thank everyone that's joined us. And if you guys are interested in participating in the World Cup, there is a link in the description of this video, and you'll be able to see what criteria you must meet in order to pass. But just to run through the entry criteria, you need to have passed the previous evaluation or a challenge with any prop firm. You have to have won a competition with CTI or another prop firm. Or you have to have made at least 10% net profit in a previous competition with any prop firm. So that was the criteria. And the reason why we chose this criteria was so that the caliber of trader was increased, right? The standard was increased. And so this competition doesn't have, 10,000 traders from all around the world. The traders that have applied are amongst some of the best funded traders in the world. So if you want to be part of that and you want to be crowned the #1 funded trader and win $400,000 funded account in the process, that's the cherry on top. I'll be actually interested to hear you guys in the audience. What would be better for you? The recognition of being the #1 funded trader or a 400,000 account? What about you guys in the panel? Just a quick answer. What would you prefer? The recognition or the 400 account?
Probably the 400K live account.
All right. Cremo, what would you prefer?
I think it's the recognition. It's better than if we are the best. It's a top.
The recognition. What about
the
yourself,
best in the
Abdul
world?
Hafiz? What would you prefer? The recognition of being crowned #1, or would you prefer the 400K funded account?
Yeah, to me, I prefer to have my 400K funded accounts.
Yeah. Good. Well, look, guys, you get both. All right. You get both. So you're going to win in both cases. So I can see there's a mix between recognition, the account. Yeah, the 400K. Yeah, there's definitely but the good thing is, just like our friend Maui, you get the best of both. So on that note, I want to thank the panel. Thank you very much for joining us, for taking your time out of your day and sharing your wisdom, your experience, your story. I also want to thank Ahmad. He was unable to connect a few times. But yeah, Joseph, Cremo, Abdul Hafiz, it's been an absolute pleasure. Thank you very much. Good luck in your funded trader business and good luck on the World Cup.
Thank you.
Thank you.